Welcome back. We're going to review another book with my good friend David Martin Jones. Welcome back, David.
Thanks for having me.
So this is the book we're going to look at, The Dictatorship of Woke Capital by Encounter Books. The publisher is Encounter Books, and the author here is Stephen Soukup. Stephen Soukup, an American who is involved in the financial industry. So David, this is your choice of book for this week. So this book, we're talking in February 2021, and it is being published actually next week. So in the final week of February, and it's your choice of book. So I'm pleased to discuss this with you. I think you know the political economics better than I do. I've taught political economics, but it's not my specialty. And there's some interesting political philosophy in here. So I just preview what I think this is about. So I think this is quite shocking in the sense that the author is saying the financial services have gone woke. And I didn't realize that. I knew big tech, social media, they've certainly gone woke. But he's saying big capital, and it doesn't really make sense because we think of capitalism, capitalists in the Marxist sense as selfish and heartless and not woke at all. But Soukup, Stephen Soukup, has a lot of education for us here, to actually going back more than a century to the progressive capitalism or the progressive financial virtue motivations in the industry, particularly in America. So that's what it's about. It's historical, it's philosophical, and it will end with a roundup of the suspects on the progressive side, and also their opponents on the non-progressive side. So that's what I think it's about. What do you think it's about?
Yeah, well, I think it draws our attention to the way in which the major developments in the market, in markets economics, have shifted and given immense power to both asset managers, like BlackRock, which comes across as quite a shockingly woke investment organization under Larry Fink, its interestingly named CEO. And their links, or the links of these big financial asset management companies to the more, those companies that have been most enhanced post-COVID, but even after the Great Recession of 2008, the AI tech companies, the GAFA, tech, the GAFA group, Google, Amazon, Facebook, the manner in which those new industries have also developed a political agenda, a woke agenda about the issues of governance, diversity, environmental, social, and governance concerns, the ESG, which now affects how assets are supported or gives guidance on where pension funds should put their money. This is a very, very interesting material that Soukup has unraveled and brought our attention to. I'm less convinced by his broader philosophical analysis of how this has come about, going back to the interest in public administration from the 19th century onwards. It throws together too many characters, if you like, in this evolving psychodrama of capitalism, and it wants to get back to something called neutral positions on investment. Well, I don't know whether capitalism has ever been neutral, really. It's been liberal in a classical sense in the 19th century. Now it's going liberal in a woke illiberal sense. It might be that its own internal contradictions in its wokeness might actually undermine it. Because what becomes quite evident is the environment, social, and governance criteria that are applied to American companies, and he uses a number of companies that have been taken out, like the Chicken Little Group. That kind of requirement of environmental, social governance concerns applied to seemingly US companies or investment strategies by big pension funds like CalPERS is inherently problematic, because a lot of the companies it's advocating, like Google, Amazon, Disney, who are seemingly ethically pure, are actually hugely invested, as Soukup shows, in China, which abuses human rights on a kind of regular basis. So the internal contradiction of Finkism, promoting environmental, social, and governance issues governing investment, runs up against the fact that they're also able to ignore what's happening in China. How long that can continue as we become more aware of the China threat, I suspect these issues will become more and more prominent, even in the liberal press.
Yeah, so there's a lot to discuss there. So you mentioned how he ends the book. So he ends telling us about how the structure of the financial services industry has changed. And we should talk about that because it's changed to give the woke more power. There's been consolidation, and we should talk about that as a recent, immediate term, recent years structural change. And there's also the philosophical change towards wokeness as a fashion in the last 10 years or so. Let's ground his argument, because he has as you mentioned, he has a sort of historical philosophical argument. And I share with you some concerns about some of the leaps he's making between management science, administrative science, that's the political science type of administration. He's arguing about that overlaps management science on the business side in its progressive roots. But let's be fair to his historical argument here. Now, I was impressed that he gives us a really pithy summary of critical theory. I wasn't expecting that in this book. So he will take us back to Jean-Jacques Rousseau in the 18th century, and he'll take us through Marxism and the Frankfurt School in the 1920s, where critical theory is born. And he will anchor the philosophical roots of woke business in the Frankfurt School particularly. And then there's also a parallel historical trend in America, which is American progressivism, left-wing progressivism as epitomized by Woodrow Wilson. So that's what I think historically, philosophically is going on here. Am I right? What do you think is the historical philosophical argument?
He is at time, as you say, there's a very pithy summary of the Frankfurt School and its shift away from Marxist economics to the cultural area, which has had an impact on the evolution of wokist understandings. Critical theory has become the de facto ideology of the universities. really since the 1990s. But I think what I find problematic in his earlier discussion of 19th century developments in capitalism and in classical liberalism is it elides a lot of things together. So for instance, there's he seems to think that the evolution of 19th century understandings about progress, which required utility maximizing understandings from Bentham, who gets very little mention, and John Stuart Mill, a classical liberal, who would not be averse to rational management understandings in terms of, or not so much rational, but progressive understandings when it comes to capital and markets. So I think there's a tendency to sort of see classical liberalism, for instance, the Bloomsburys, Keynes, and G.E. Moore, as much a problem as Habermas and Marcuse. And this seems to me a kind of lumping that needs separation rather than combination into this sort of what becomes something like a conspiracy theory, I think.
Yeah, so we should clarify so Soukup, we're talking about the author, Stephen Soukup, his philosophical grounding is very German. And you're talking about British classical liberals and economic theorists like Keynes, who don't feature much in this book, Stephen Soukup's book. It's very anchored in Germans and Americans. So even Marcuse, you just mentioned Marcuse, he's essentially German American. So he's a bridge, as Soukup describes very well. Marcuse is a bridge between the Germans of the Frankfurt School who go back to Germany and the Americans who haven't been fully exposed to the Frankfurt School, because the Frankfurt School is writing in German even when they're in New York during the Second World War. Marcuse articulates that school later in English for an American audience. And he, according to Soukup, he popularizes the Frankfurt's take on society and culture. So it's very German-centric and American-centric. It does not attempt to bridge British or Anglo, let's call it Anglo-centric classical liberalism. But having said that, it's very pithy. So again, this is a reasonably short book. So this is about 160 pages of main body text. And the chapter on critical theory is very, very pithy and very, very entertaining too. So he's certainly an entertaining writer. He's got some interesting colloquialisms.
I suppose, well, the passage that I find a bit, problematic is how...
do you have a page number, David? Do you have a page number? So
it's page 41. So we get, when the Frankfurt School arrived in the United States, settling down roots at Columbia University, it landed on fertile ground. Between the Fabians and the Bloomsburys in Great Britain, Marxism had become the accepted worldview of the avant-garde in the arts and the humanities, and even economics. The philosopher G.E. Moore's 1903 book, Principia Ethica, formed the foundation of a new secular religion that defined liberty in purely libertine terms. The net effect of the two was an educated elite who saw existing Judeo-Christian morality as part of the false consciousness of civilization and believed that a new and better morality should be defined exclusively by their feelings. John Maynard Keynes, the architect of the Roosevelt New Deal, one of the great advantages of Moore's religion was that it made morals unnecessary. Now, I find that sort of attempt to reduce what was a classical liberal understanding. I mean, Moore and the Bloomsburys are the descendants of John Stuart Mill. They're the continuation of Bloomsburyism is out of Millsian radicalism, classic liberalism. And we've got this problem here of that, yes, these radicals in progressive thinking, classical liberal thinking, did not take tradition in trust. In fact, that was the whole principle behind utilitarianism, that you took the world as it is and you saw patterns of behavior that are traditionalist that are not particularly working. Now, to see that classical liberal understanding that wanted greater liberty, maximizing liberty, avoiding the tyranny of the majority, which is central to that classical liberal understanding, and allowing free choice for individual behaviors, not in other words, imposing kinds of behaviors, but allowing people, adults, to make their own choices. To combine that with some version of critical theory and then say that it's part of the same kind of movement to embrace a woke progressive agenda. Its understanding of progress is very, very different from critical theory's understanding of emancipation. It's concerned with liberty, not emancipation. And the combination of sort of G.E. Moore with the Frankfurt School, with which he'd have had little time for, seems to me categorically confused, really. And it comes again on page 62 to 63, where he considers American pragmatism part of the problem. Dewey, Pierce and James, and Rorty gets singled out in a sentence for being particularly shocking. But he says on page 62, like Mill, Kant, and Hume, and the rest who came before him, Dewey disdained the idea of an existing body of acquired human and social moral knowledge that could and should be passed down from generation to generation in the form of custom and tradition. He believed that knowledge was not something that could be learned, but something every individual student had to discover for himself. This is reflective thinking. And he tries to, to say that's similar to critical thinking, a la one supposes Habermas. But this kind of pragmatic thinking, sure, it did, classic liberalism was not conservative. It was deeply antithetical to conservatism in its traditionalist sense. Soukup obviously has a lot of time, as Encounter Books does, for classic conservative thinking, but we have to give attention to the fact that classic liberal thinking did criticize classical conservative ideas, and it did promote the idea of tolerance for different viewpoints, classically in Mill's essay on liberty. And the further confusion then is to say, well, I don't like Dewey, and I'm not particularly fond of G.E. Moore or Keynes, but later on, he approves of a classical liberal like Karl Popper, saying that, the crucial thing about, looking at markets or economics or science is the principle of falsifiability. Well, that comes from classical liberal thinking, not from conservative thinking, from classical liberal thinking. And the importance of the logic of scientific discovery is the principle of a hypothesis that can be tested. Now, that's a liberal, classical liberal understanding. And so he's sort of, I find, a little confused here. That's my big criticism of the book.
Well, I think I find myself agreeing with most of what you're saying, but I think I'm going to be a bit defensive about Soukup here, because I think he's trying to in that so far as he conflates classical liberalism, progressivism, and even conservatism, I think the point he's trying to make is that everything gets corrupted. So one of the themes he's making when he's tracing the philosophical roots of woke business back to the Frankfurt School is that Marxism, and back to Jean-Jacques Rousseau, Marxist, Frankfurt School, the woke, they have the idea that society is chained by socially constructed views of itself, which are false, and they constrain both truth and personal liberty. So that goes back to Jean-Jacques Rousseau. And I think Soukup is conflating classical liberalism in there only so far as classical liberalism has been corrupted by progressivism to become also obsessed with breaking socially constructed chains and finding a false liberty, which is a liberty from tradition and established ways of doing things and personal interest, and then towards these false liberal values of equity, social justice, serving stakeholders instead of shareholders, and the other things that he will talk about. So that was my impression, and I should say too that I appreciate the pithiness. You are correct that this is not a comprehensive review of classical liberal political economics. In fact, there's very little classical liberal political economics. So Keynes is mentioned in passing. John Stuart Mill is mentioned twice, 3 times. I don't know. But at the same time, I appreciate the pithiness of this work, and particularly that chapter on woke or critical theory. It was so pithy. I actually wished that such a chapter had grounded books that are focused on critical theory, such as cynical theories, which you and I have discussed too. So that's my defense of Soukup here.
No, I think you're, I mean, his short piece on critical theory is exceptionally good. I mean, my only criticism is to elide it into Bloomsburyism, which he seems to not, think is awful. But I mean, one can review Bloomsburyism, but you don't see it as a vehicle for, the Bolshevik Revolution, really.
No, but I think it's fair to say that Bloomsbury had the same view that society needs to break its chains, and one of the ways to do it is sexual liberation, which is what Marcuse was saying. Jean-Jacques Rousseau is part of that trend too. So, and that speaks to the counter normativity of critical theory, is that what society needs to do is do the opposite of what is normal and traditional and established, because normativity are these socially constructed chains. So Bloomsbury, I think, fits into the argument that he's making there, that there is this theme all the way back to Jean-Jacques Rousseau, that we're all chained by socially constructed ideas, and then that is going to end up corrupting business, whereas where business managers, corporate leaders, business managers, business academics start to think that what we need to do is break down the traditional ways of how we used to do things, which is to serve the shareholder. Now, instead, we should serve stakeholders and navigate around shareholders, for instance. You're not convinced?
Very well put. I don't disagree, but I do think there is, I think we have to give, well, I mean, my criticism is then that if we're always being guided by tradition, in a sort of a completely conservative understanding of the world, that doesn't want anything to change. We would be in a world that didn't want the Industrial Revolution or the kind of market reforms that were made in the 19th century by people who were progressive liberals like the Mills, the Bloomsburys, etc. Okay, they had their downside in terms of their understanding of themselves as an elite. This is true, but their elitism was far more tolerant than woke elitism. And I think what seems to me to be missing from the overall viewpoint. So the strength of Soukup for me is his is the way in which, in the second part of the book, he shows very clearly how an environmental, social, and governance agenda has captured Wall Street and even the Fed. And this is extremely disturbing. And I think the information he puts there about how this has evolved, particularly since 2010, the sort of alliance of asset managers, the Fed, with the big tech giants and the Democrat Party, is very uncomfortable and very concerning. That is, for me, the huge strength of the book. The earlier, sort of evolution of this, I suppose I'm not that convinced by, because otherwise, the problem to some extent with any conservative philosophy is that it doesn't like change, but it has to deal with change. And, the absence, I think, from my perspective, would be, well, what we are encountering is, the problem from the 19th century, really, of what Oakeshott would call rationalism in politics. That whether it's a Marxism or a classical liberalism or a post-utilitarian understanding of development and progress, you're dealing with the idea that we can administer everything. So, he rightly says that the key move in politics is the movement towards public administration and keeping that separate from politics. So, that interesting discussion of Woodrow Wilson and John Hopkins as the founders of American public administration and governance related a kind of understanding of the political that doesn't want politics, that wants the administration of things, and that evolution is more clearly tied to a modern preoccupation with rationalism in politics, which could then encapsulate or include understandings coming out of that liberal administrative and then business management agenda, and fitting it in how it can be then captured by an equally rationalist approach to the world, which is economically failed, but has an emancipatory agenda that can be allied with it, i.e. critical theory. So my argument would be the strength of the work is the second half, showing how this alliance, came together, but which has, I think, constituting weaknesses that can be exposed. And the earlier part, which needs to see how this, preoccupation with administration corrupted a democratic politics, both in the United States and in Europe.
Yeah. So we should point out at this point that we don't know the author, and we don't have any stake in anything the author does or in this book. So we have no interests in being pro or anti the book. We clearly have we have slightly different takes on it, which I think is good creative tension. Is that the right word? I think we should talk about Soukup's historical part. So you're mentioning the historical part. It does overlap the philosophical part, which we've already dealt with, and I share some of your concerns about it. You're praising the historical background that he reviews for us, and I think I agree with you that the history is probably better than the historiography in this book. Let's just clarify that. So I think the part where he talks about Woodrow Wilson is particularly enlightening to me. So for instance, I didn't fully appreciate that Woodrow Wilson was essentially bankrolled through his academic career and then his political career by friends in finance and big business, and then they had an agenda even before he was elected president for a central bank. So that agenda goes back, according to Soukup, it goes back to at least 1907. Wilson is elected in 1912, and he does enact a central bank, and he appoints some of his friends to it. So he's making the point at this point of the book that there's this hypocrisy in progressive economics, that it poses as populist in the anti-corporate sense of populism. So this is left-wing populism, it's anti-corporate, but it ends up serving the corporations that have aligned with the progressives. And he keeps making these, he keeps giving us these episodes. So Wilson does it, Franklin D. Roosevelt does the same thing, talks anti-corporate populism, we're going to fix the Great Depression, but in fact, does what his friends in corporate finance and investment banking want him to do. Clinton does it, Obama does it, and I found that part of his historical review, where he keeps fingering the progressives for being hypocrites on this, that they're going to reform the financial system to look after the little man, but in fact they're being directed by the big man, right? I thought that was very effective. That historical review was very effective. But what did you think?
Yeah, well, I thought like you, I found the evolution of Woodrow Wilson's political development, something I didn't know. So his, obviously, from a European perspective, I mean, Woodrow Wilson's the League of Nations man, and the somewhat dubious consequences of all that. But the idea that he was deeply involved in a sort of democratic politics or a progressive politics coming out of Johns Hopkins from the 1880s onwards, and preoccupied with this idea of administration by an elite, which is part of a progressive agenda that's obviously deeply concerned with the dangers of democracy and the dangers of populism from the late 19th century onwards. So to trace that, or to identify that, kind of genealogy really from Wilson through the establishment of the Fed, the links to big finance, J.P. Morgan, crucially with the move towards the Fed, or the establishment of a central bank, and then the evolution of that relationship through the 1990s and onwards with Clinton and Obama. So and how that pans out today, and what do we think of the role of central banks, because he's quite clearly onto something there, and in some ways you'd have liked a bigger history of this, that I'd like to have known more about how the Roosevelt move after Hoover won a thumping victory in 28, but by 32 was screwed by the collapse of the Dow, the collapse of Wall Street after 28, and the run on the banks, and how the Fed then failed to manage that. So I would, because we get Milton Friedman and the idea of a company being responsible to its shareholders, or to those who own the company, the management of companies being accountable to the corporate, the corporation that employs them, including shareholders. Friedman gets, in there for that. I would like to have seen more on Friedman's take on the role of the central bank, with his great work on monetary policy, and how that would fit in with the evolution of the Fed from the 30s onwards, and how the Fed, it was under Fed guidance that the Glass-Steagall Act was introduced in the 30s. And then the major move away from that by Clinton under the influence of, Rubin, who was a Goldman Sachs person, and the catastrophic consequences of that. Some of that financial stuff I would have liked to have seen more of, and less of the the sort of attenuated philosophy.
Yeah, so that's true. So implicitly for Soukup, the Great Depression is made in Woodrow Wilson's central bank. So either the central bank, so we're talking about the Federal Reserve in the American case, either it's promoting the corporate interests of the people who set it up and were appointed to it, friends of Woodrow Wilson. Either they're to blame directly in a positive sense, they directed the Federal Reserve in a certain way, or they're to blame in a negative sense, they didn't do enough to prevent the Great Depression. So that's implicit in Soukup's history, but he actually doesn't prove that. So he doesn't directly provide the evidence for that. It's just implicit. And then Franklin D. Roosevelt, to his credit, comes along and he introduces some regulation that, such as the Glass-Steagall Act of 1933, that helps to temper the financial services industry. So that act separates investment banking from ordinary commercial banking, or what we think of as high street banking. And then Clinton, in 1995, under the influence of Robert Rubin, he overturns the Glass-Steagall Act, and implicitly, in Soukup's account, that is responsible for the 2008 crash under Barack Obama, because that conflation of investment banking and commercial banking leads to very risky behavior. It's underregulated. The people who are doing it are not as exposed to the risks as the debtors. And then Obama doesn't do anything positive about it. He bails out the financial services industry, does not reform it, certainly doesn't reform it to the extent that Franklin D. Roosevelt did. So we're still in this rather anarchic financial services world as Soukup sees it. I'm actually he doesn't use anarchic. I'm applying a international relations theoretic term to that. But that's pretty much the argument. And then on top of that, also under Obama, financial services go very woke. So they adopt fashionable woke philosophy, and there's a lot of consolidation after the 2008 crash. And he makes the shocking point here, which I've never heard before. And this is where I think you and I should talk about the current structure of the system. He says, he makes the point that there's this rise of proxy services. So investment banking shifts from the holders of the assets. So essentially, the corporate chiefs serving the shareholders under the Friedman model, serving the shareholders by managing assets directly. They start to put their assets into the hands of asset managers, and then asset managers put them into the hands of proxy services. And then those proxy services get consolidated to the extent, and this is a shocking statistic, 2 companies dominate 97% of proxy advisory business. And that gives them more power than asset managers had a century ago, when they were more conservative and more godly in Soukup's terminology. So now you have this consolidation, and you have less regulation, at least than during the 1930s. The proxy services have a lot more power. They've gone woke, and because of that power, they can tell corporations how to behave in a woke sense, or they lose their ratings. So these same proxy services are rating corporations in terms of their risk, and so they can influence investors in those corporations if those corporations are not being woke enough. So structurally and ideationally, a lot of things are coming together in the 2000s, 2010s that suddenly make the financial services sector both more powerful than it's ever been before and woke, more woke than it's ever been before. What did you think of that?
Yeah, well, I think that's, I mean, that identification of the role of the proxy advisory services, as you say, 2 companies virtually running how proxy shareholder interests are looked after, and then the link to various asset management companies, particularly the big ones like BlackRock, who follow a similar agenda, and then you get this sort of evolution the evolution that I think is very well handled is this movement towards what he calls a normativism in terms of investment, which takes off really from business school management theory in the 1960s, that from looking at what makes for efficiency in a business, that somehow norms get added onto it, like a sort of a Rawlsian understanding of justice, social justice, as a sort of following 2 principles, one of which is greater equality. That understanding comes to infect business management thinking, and it affects the idea of corporate governance, which then, with the growing preoccupation with things like climate change and diversity, these norms then get written into where asset managers can invest. So, and then it requires, on top of that, these environmental, social, and governance criteria written into the corporate kind of management structure. And the way that that's come about by this, these proxy management, these proxy shareholder arrangements, and the collusion, if you like, of asset managers, and then leading players in the finance world. Michael Bloomberg comes across as particularly worrying, but then others that I didn't know so much about, like Ray Dalio, and then of course the richest corporations on the planet, like Google and Bezos's Amazon, are all part of this movement towards woke capital. And I think the strength of the book is this second part where he shows these relationships and gives these very nice potted summaries of how they interact in a way that's well, as you said, quite shocking, and at the same time manages to be completely down on any company in America or Europe, presumably, that doesn't follow their agenda, yet is completely indifferent to the abuse that's going on in companies like Foxconn in China, where Google is, producing its iPhones. So what comes across, and maybe you could have made more of it, is the utter hypocrisy of, this kind of Democrat woke capital.
Yeah, I mean, he does. I think he's. I mean, you're saying he doesn't necessarily do enough to bring out this hypocrisy, but to be fair to Soukup, he's very direct. I mean, his criticisms are very direct. Sometimes when he criticizes not just corporations, but he criticizes their CEOs, I wonder, could he be sued for this?
Yeah, no, that's very true. Actually, I was also wondering that, because he's taking on some big figures who will not exactly like what he's making of them.
Right. So
and particularly people like Tim Cook and the Jobs' wife, who I didn't realize had so much of a stake in Disney and driving it along a woke agenda. I'd always wondered why Disney was getting so down on its earlier product like Dumbo, and seeing it as kind of inappropriate to our times. So the idea that Disney now plays a woke agenda, as does Tim Cook with Google and Amazon and Bezos. It's a very worrying configuration, as well as the leading market press is also run on a woke line. Bloomberg being one of the key kind of vehicles for our knowledge of markets. And you can extend that now to Europe as well, with the Financial Times, for instance, or and the role that doesn't get much coverage because he's focusing on America is the role of people like Christine Lagarde and Mark Carney at the Bank of England, who had such an egregious impact on decarbonizing the British economy, which is going to be pretty catastrophic going forward, I suspect.
Yeah, and this brings the point of the anti-democraticness of woke business, which we haven't talked about yet, but you reminded me of it with both Lagarde and Carney, because both of them opposed Brexit on economic terms, and in a classic administrative state way, in Woodrow Wilson's administrative state way, meaning technocrats should run and Democrats should shut up, because voters are ignorant and mistaken, and they should be blocked or redirected by, or even ignored by, the technocrats. And Mark Carney particularly is a technocrat that Woodrow Wilson would have loved. He just it doesn't matter that we voted for Brexit; it's the wrong thing to do. And by the way, he exposed himself as a terrible economist, because his arguments about why this was a bad thing to do were vacuous, and he was proven wrong. I mean, he said the economy would collapse after the vote in 2016, and he said it would collapse after after we actually exited the EU in 2021, and obviously he was just wrong. But he is actually fingered at one point in Soukup's book, as one of the technocrats, but in a different context. So he was speaking. Mark Carney was talking about climate change and how investors need to need to adjust to be environmentally sustainable, or there'll be a huge bubble bust up, worse than the Great Depression in the 1930s. So we should talk about that anti-democraticness, because Soukup, I think, makes a good point that the stakeholder model. So the stakeholder model is taken over from the shareholder model. That is anti-democratic, and it parallels Woodrow Wilson's political scientific argument that democracy should be run by technocrats instead of elected representatives. So Woodrow Wilson is anti-democratic on politics, and the stakeholder model is anti-democratic on business, because traditionally we think about shareholders having a vote and having at least some say in how the corporation is run. And according to Milton Friedman, in his shareholder model, the CEOs or the chiefs, all the C-suite, they should be thinking most about the shareholder. That's in the 1970s. At the same time, in the 1970s, this stakeholder model is emerging, which turns that on its head and said, don't worry about shareholders. If you worry about shareholders, you'll get these short-termist perverse incentives like dividends. And it will not take enough notice about the customer and the environment and equity and these other progressive agendas. So the stakeholder model relegates the shareholder who actually owns the company, relegates that behind people who don't own the company. So that's a sort of intellectual property, or that's not intellectual property, that's an assault on property rights in Soukup's argument. But more importantly, it's assault on democracy, because the shareholders are the equivalents of voters in a political democracy, and they're being pushed aside to serve stakeholders who don't even have a material stake in the corporation. They have a material stake in things like, in more nebulous things, such as society, the environment. And I thought that was very effective. I thought, to go back to our earlier discussion about the philosophical and historical links between the administrative state in the political scientific sense, as articulated by Woodrow Wilson, and the administrative state in the business world, as articulated by people like let me just go back a bit to the 1970s. So we don't even have to go back that far. So but Barack Obama is very wise to this argument of stakeholder theory, and Soukup does a good job of explaining Obama's principal role in the 2000s, 2010s in asserting this stakeholder model. So there's a theme here which we haven't quite articulated ourselves before, that woke business is actually anti-democratic, because your vote as a democratic citizen and your vote as a shareholder are being relegated behind stakeholders who are chosen by asset managers and proxy services, not necessarily in the interests of the voter and the shareholder. I thought that was very effective, but
Well, yeah, I think he makes, I mean, he has a long quote from a Friedman column for Times, in
1970.
72, and making that point that a corporate executive is an employee of the owners of the business. The responsibility is to conduct the business in accordance with their desires, which generally will be to make as much money as possible while conforming to the basic rules of society. In other words, the manager is the agent of the individuals who own the corporation, in other words, the shareholders. And I suppose the issue that that evolves out of that is that he's saying that the shareholders are the people that the corporation has responsibility to, and if the corporate executive is pursuing some other agenda like social responsibility or diversity, it's not serving what the business was there for, which is to maximize profit, presumably. Now, he calls this the Friedman Doctrine, and that's absolutely, that's a central, kind of perspective in the book, and how that's been eroded both by misunderstanding that document, that doctrine, by implying that actually it's only short-termists, that shareholders are only interested in driving up the stock market price, and that might affect the long-term sustainability of the business. And he's not saying that. He's just saying that the corporation, or the managers of the corporation, are accountable to the shareholders whose interests are in the corporation. They might be both short-termist and long-termist. In fact, if they want a regular dividend, they're not so much interested in the share price, they're interested in the dividend return. So the erosion of this by the ability from, or the development from the 70s and 80s of trying to impose some Rawlsian norms coming out of social justice theory from the 1970s upon the shareholder model, to replace the shareholder with the stakeholder, and seeing that stake as accountable to a new set of criteria that are not to do with the maximization of business profits, but to do with environmental, social, and governance concerns, opens those companies to a whole range of imposed, elitist, woke ideology, really, which will require asset managers, pension funds, to be invested in ethical companies rather than ones who are just trying to make deliver as much kind of market return to its shareholders as possible. So suddenly you've got this shift towards environmentally acceptable companies rather than dubious, non-environmentally acceptable companies like presumably BP or Shell, who then have to rapidly try and turn a carbon-based economic business model into an environmentally sustainable one, which involves them in all kinds of convolutions, which they can of course make, which is, I find quite interesting. But then on top of that, you've not only got these environmental concerns, you've got these diversity issues. And as one of the leading critics of that, this model, one of the activist shareholders, Justin Danhoff, who seems to be, a hugely admirable figure from the book's account, saying, well, why aren't there diversity of viewpoints in this, diversity model, which is imposed by, seemingly the major figure in making diversity accountable issues, which are diversity not in terms of viewpoint, but in terms of gender, race, etc., LGBTQI accountability, is Eric Holder, the former Obama Attorney General. So, this evolution of an environmental, social, and governance agenda imposed upon leading, Dow or FTSE companies is obviously, affecting how capital is being organized now in ways that are, obviously deeply troubling. But one wonders, I mean, my caveat would be, how sustainable is this long term? If in fact these governance models, which do not have diversity of viewpoints, are bought into agendas that are not, market-based, won't they eventually kind of collapse under their own either inner contradictions or be increasingly exposed as making, lip service to this diversity viewpoint, whilst at the same time, following a completely, tooth and claw capitalism when it comes to, labor rights or, dealing with countries like China.
Yeah.
The incoherence of the ideology, I think, is so, evident that one wonders, as long as there is diversity of, media, like Encounter Books, it will expose itself ultimately.
Yeah.
Collapse under its own inner contradictions.
Yeah, I think implicit in this book is that the hypocrisies of progressive capitalism will undermine it. I don't think Soukup, if I had a criticism for Soukup, the prescriptive part is quite vague. He ends with a very strong assertion, but he doesn't explain how that's going to come about. So he's going to end the book by saying we need to depoliticize business and depoliticize markets. He doesn't have an explicit prescription for how to do that, but I suppose implicitly it's going to happen because fashions change and dogmas get undermined by exposure of their internal contradictions and hypocrisies. And as Soukup explains, there are hypocrisies for BlackRock, for instance, in investing in Chinese companies that are not environmentally sustainable, at the same time as BlackRock is saying we're not going to invest in these American companies because they're not environmentally sustainable. So I think you're saying you're persuaded that cycle will come around, right? The system undermines itself.
Well, I think I mean, he uses Popper, but he never mentions Hayek. That these things, it is a market, and markets quite often run on fashion. I mean, Smith and Hume knew that, back in the 18th century. So if a company is not delivering, if its internal, kind of bases are increasingly shown to be unsustainable, and then presumably, the market, the share price will fall. At the bottom line, BlackRock, Goldman Sachs, JP Morgan are all about maximizing profits. If diversity and environmental concerns are undermining, profits, that might come back to bite them eventually.
Yeah.
But I mean, there is, that's not to say it's not hugely worrying, but there is this elite kind of consensus that wants to shape the market in a woke way. But the nature of the market is it likes innovation and difference, and maybe it won't be via BlackRock, but it would be by something else that a new model might emerge.
Well, the market likes
the incoherence. I mean, one area where you suspect, which Soukup alludes to, is the shift from, you know, carbon economy to, you know, a green economy might be so, you know, radically disfiguring of the economic basis that it will undermine itself, really. I mean, there's a lot of evidence to suggest that, you know, the so-called carbon neutral economy is itself deeply involved in areas like rare earth, which are tearing up the planet, you know. And I'm not sure that it's Soukup or somewhere else I read that, for instance, you know, cobalt mining, essential for batteries, which are entirely good things, relies on slave labor in African mines, which BlackRock pays no attention to. So, you know, the whole shift to the so-called carbon neutral economy has itself huge environmental impacts, which you think, well, this is absolutely incoherent, really. And we've got those, you know, carbon trading platforms that have been exposed as a complete, you know, kind of rort, really, a complete, you know, fake kind of manipulated market, which tries to show that, you know, carbon neutral, you know, wind farms, battery, you know, sun-based battery technologies are, you know, more efficient than gas or oil or coal. And, you know, the whole market's been, you know, shonkily constructed. So I think in that area of climate change and that policy, which is undermining and, you know, privileging certain kinds of technologies at the expense of something like liquid natural gas, which is, you know, far more efficient at heating homes, and the implicit assumption with something like Boris Johnson's Green Revolution that, you know, who's going to be paying for this green technology? Well, it's your democratic masses, actually, who are going to have higher energy costs. Well, China, which is coal-powered and, you know, manufacturing, creating all the greenhouse gases, is given a free pass. I mean, the assumptions there are so obviously incoherent that you don't know how long the environmental, social, and governance ethics can be sustained in a functioning market economy.
Yeah, well, I agree with all that. I think I'll add what Michael Moore's film, The Planet of the Humans, has articulated best, is that corporations have interests in pretending they are green, but when you scratch the surface, the way they measure greenness is corrupt. So they will say, you know, they're burning trees and saying that's sustainable.
Yeah.
You know, they're building solar power plants, but solar, the actual hard assets, the physical plant, as the Americans say, takes more energy to build than they will ever return in their life cycle, and that's true of wind turbines too. Takes more carbon to build the damn things than they'll ever save in their short life cycles, in the very expensive life cycles. So that's an issue that certainly the environmental sustainability governance investors are exploiting, because they're saying, look at BP's spin-off into solar panels, you should invest in that because that's green. And investors are either too lazy to search for themselves, or, as Soukup exposes, they're being told what to do by these proxy services, who are corrupted by being paid by those corporations themselves in the form of consultancy, nominal consultancy, to talk up those assets. What Soukup calls a protection racket. So the proxy services are running a protection racket. You buy services from us, we'll tell people to invest in you. We'll tell them that you are woke enough to be invested in. It's a protection racket. So that too needs to get exposed to undermine this this fashion.
Yeah, well, I think that's the strength of the book is that he shows how that protection racket has evolved, particularly since the financial crisis of 2008, and the way in which this relationship between big finance asset management companies like BlackRock have been taken into government, into the Fed, to manage its environmental and diversity awareness agendas, and into government, into the heart of government itself, so that the proxy shareholder groups, the big asset managers, BlackRock, Vanguard, State Street, are all part of a kind of an agenda that wants this woke outcome in order to ethically greenwash itself in a way that actually undermines any proper accountability. So as long as there is, scope for accountability, one suspects it will, be exposed for its, hypocrisy and its, inherent problems in sustaining its agenda long term, especially when it comes to undermining any basis for greater, kind of workplace security for the blue collar, American working class, which it is inherently suspicious of. So although it's back, in the driving seat of government, one wonders, if it follows this agenda with its, pro-China, approach to global, like wanting globalization still, with cheap labor, often, Laogai-based labor or Foxconn type labor in China, whilst imposing a diversity and environmental standards in the US, which will inexorably undermine manufacturing and any secure employments in the what used to be called the tangible economy. This is where the model will have increasing problems, and I suppose the one of the areas that I think the book might also have gone into is recent works on the evolution of a tangible economy, an intangible economy. Steen Westlake and Jonathan Haskell's work on the capitalism without capital, and the emergence of an intangible economy based on AI, brand, and the idea that research and design, the application, the new economy that took over after 2008 is so not based anywhere. It can be moved overnight. Something like Google owns very few what Steen Westlake calls tangible, sunken assets. It hasn't got, lots of property. It doesn't have a manufacturing site that can't be changed, very quickly from, sort of California to Texas, where it might be cheaper to operate. Amazon, the same, it just needs it needs warehouses, but it'll go where the labor standards are minimal. I think that sort of intangible economy, the role of AI, and what's that, and the lack of attention to how that should be addressed by a political or democratic accountable politics. That's an area that I think that the book might have addressed as well, although that's asking for another book, really.
Yeah. Well, thank you, David. David Martin Jones and I, Bruce Oliver Newsome, we've been discussing Stephen Soukup's The Dictatorship of Woke Capital, How Political Correctness Captured Big Business, a book that ends, depoliticize business, depoliticize markets, back to neutral. And we could say that about a lot of industries and sectors. So thank you, David, a pleasure. I look forward to the chance to discuss another book with you. Thank you, sir.
Thank you very much too.